There's a little bit of conviction coming back. India did underperform for a brief period between October and March. In April and May, it has caught up a lot of that year-to-date underperformance. In fact, that's gone down to zero. But the significant thing is that the earnings are coming in quite good, and the economy looks very strong. We've got multi-month highs on the PMI. So suddenly, I think investors are starting to believe something that we've been talking about for months, that this is a new profit cycle and profits will surprise on the upside. And when you get into a new profit cycle, at every point you look back and you say, oh God, stocks were cheap last year, because earnings, go forward. So I think we're in that type of a cycle where on a trailing basis, stocks may not look cheap enough, but on a forward basis, I think they will look actually quite attractive. India is, I think, offering something very different. I think India is offering compounding which may last for a few years. It's not a 12-month thing. In all these cases, we are making a 12-month view. In India, I'm making a multi-year view, plus a 12-month view. So the 12-month view looks positive. I think the market, unless something untoward happens in the next 6 months, is going to start pricing in a majority government as you approach the end of the year and go into early next year. So it's going to go really strong into the elections. And then if the election results come in line, you get a little bit of a correction in the stocks. And if it, of course, disappoints, then you get a very sharp correction. So if you look at the last 30 years data, every single US recession has produced a bear market in India. I don't think that's happening anymore. And it's down to a lot of heavy lifting we've done on policies. So it starts with inflation targeting, then the fact that we allowed retirement funds to invest in equities in 2015, what I call as the 401k moment for India, the focus on FDI, then a global factor which is China plus one, the emergence of Indian consumer, because we have crossed that magical number of 2,300, 2,400 US dollars per capita income. We've now entered into a period where we become relevant as a consumer to multinational companies. So a confluence of those forces plus a lot of constructive policy action has brought us to this point. So that is how I think we are decoupling from both the US growth cycle, the US Fed cycle, and also oil prices.